Hello, family. This is Q with Mixherbs.com. Welcome to my channel. We're going to talk about one of my favorite topics. We're going to talk about this real estate market, and I want to share some information on what it means when you seeing that prices are really starting to plummet in some areas. So we're going to dive into that real quick. So when you get a chance, hit that like button, subscribe to my channel, click on that notifications button, and so you can get some of these videos, get alerted when I put upload one of the videos up. And we're going to get into it today about the real estate market and about areas that plummet real fast, what it means when the value of your property or your value of the property starts to decline real fast, faster than normal or more than national average. And what that means, family, is that that market, that particular city or county or whatever area is drastically overvalued. So it's overvalued in comparison to other areas is what's really going on when you see prices start to plummet faster than other areas. That means that particular area is overvalued. And some of the analysts are saying that places like what I would say Nashville maybe has some overvalue, and Austin, that's one of the ones that I saw too, is one of the areas where you might see some of prices that may have been overvalued, and that you might see up to 30% decline in the prices of homes. So in areas like that, that is looking at that is a pretty much drastic decrease. So I don't know if the analysts are correct, but they're predicting something that could be as high as that in areas that are overvalued. And this particular climate that we're in is like, as one would say, a perfect storm, because we're coming after the pandemic and we came into a situation where inflation was on the rise, and people had started putting their houses more on the market, and we started to see less and less buyers due to the interest rate increase for mortgage rates. So it's at 7.8%, or not 7.8%, but 7.2%, somewhere around there, somewhere, but it's over 7%. And that has really slowed up the buyers in a lot of areas. And if your house was overvalued at the time, then the decline of the price is really going to be substantial, compared to other areas. Say if you was in an area that the prices of the homes wasn't overvalued, then you're going to see a little decline because of the fact of the increased inventory and the interest rates being high on the mortgages, so you have less buyers. So you're going to have some decrease in home values. But when it's dramatic or more than other areas, then that's when you're really going to see that this market that I'm in was kind of overvalued and begin with from the start. So, and that's some of the information I want to share because, when I was in real estate for about 10 years, I've seen different markets of when, everything goes up, then it comes down, it swings from a buyer's market to a seller market and back to a seller market again. And when you experience those kind of issues, you get to see what really influences the price swings, what really constitutes a buyer's market and what really constitutes a seller's market. And when the demand is high and inventory is low, then you're in a seller's market. But when it's the opposite, vice versa, when you got a lot of inventory on the market and very few buyers, then it becomes more of a buyer's market. because the buyer can negotiate and has plenty of houses to choose from to make an offer. But when it's the other way around, and it's a whole lot of buyers and very few homes on the market, then the seller has the advantage to pretty much set the price of what he wants, and then it becomes a bidding war for the property. So in that case, then that's a seller's market. Seller can get have the advantage to pretty much ask for what he want, what they him or her wants for their particular property, and you have plenty of buyers out there just waiting with contracts or offers to offer that asking price or even go above the asking price. So that's like this. That comes about sometimes in the market, and then other times it's the opposite when the buyer has to in a buyer's market where the buyer can have advantage over the seller, and he can pretty much put in an offer, ask for a lot of different things, ask for refrigerator, to paint this, to repair this, and so the seller is kind of like, feel like he has to do that, him or her has to do that because, it's not a lot of people putting an offer on the property and it's been sitting out a long time. So that's when the buyer has the advantage. He can pretty much get what he or she wants in that particular deal. So that's what I wanted to share to you with today is that is really is one of these times where you can tell if your market is overvalued by the price decline. If the price is starting to decline a lot and faster than other markets, then hey, these homes was really overvalued. But if it kind of steady drop, just not that quick, and it's kind of in flow with the national rate of decline, then that the prices was just kind of like what they would call getting back to normal, getting back to where they should be, but they really wasn't overvalued. They kind of was like at that time that was the value, but now based on the different market, the way it is now, it's kind of getting in line with that. But if it just keeps plummeting, then that hey, these houses at the time when it was selling was drastically overvalued. So let me know what's going on in your market. If you one of these markets that it might be overvalued and what you're seeing, share your comments. This is Q with Mixherbs. Thank you for watching. Thank you for listening. Peace.